going to talk about the three methods of calculating GDP, gross domestic product of a country. According to the Senate 2008 Standard of National Accounts 2008. Here, to calculate the three methods, I use the circular flow of national income. The circular flow of national income. According to the circular flow of national income, the firms in three activities, namely agriculture, industry and service. Namely agriculture, industry and service produce gross value added. Gross value added by using factors of production from households. By using factors of production from households. Factors of production such as land, labor, capital and entrepreneurship. Then the government imposes taxes. Government imposes taxes on firms. There are various types of taxes, and then on the other hand provides transfers, subsidies to firms. Transfers are direct payments by the government to the firms and the households, right? Similarly, government imposes taxes on households and provide transfers as well. So transfers are monolateral payments, direct payments given by the government to the firms and the households. Taxes are taken from firms and households. Taxes are imposed on firms and households by the government. So here to this output, gross value added, we call it gross value added. You will understand why it is called gross value added later. I will explain it later. This is the production process, value addition process. So to this output, the government imposes taxes minus subsidies, transfers. We call it net taxes. Net taxes on products. Here the product means goods and services. Products, goods and services. Right? We call it net taxes on products. We take the net value. Taxes minus subsidies on products. Then this gross value added becomes gross domestic product of the country. Gross domestic product. Right. Then this is the value added. Value added. Value added by agriculture, value added by industry, value added by service. Then you receive the gross value added. This is the output. This gross value added plus net taxes on products, gross domestic product. The goods and services domestically produced within the economic territory of a country. We will explain that later. Right? Then out of this value added, the firms have to pay factor income, or you call it primary income, factor income to the households. This entire value added has to be distributed to the households, right? In the form of primary income or factor income. What is the payment for labor? In this case, we go for a broader concept which is known as employment income. Yes, the market where these transactions happen, we call it factor market. Okay, so what is the payment for labor? Normally salaries and wages, but here broader concept, employment income, or you will call it compensation of employees. Then the payment for land, capital and entrepreneurship, which are the property, land, capital and entrepreneurship, are taken together. The payments for land, capital and entrepreneurship are taken together as property income, or you will call it gross operating surplus later. Gross operating surplus, property income. Then within this value addition process, within this production process, the government imposes taxes, right? taxes are there which are imposed by the government, which is known as net other taxes on production. Remember the word. Check the word. Here products, here production. Production process. So value addition process. These taxes are imposed on the value addition process. Right? So when you add this, you get, what do you get? Gross value added. Because these taxes are imposed on the value addition process. So this is within the gross value added, GVA. Right? To that again, we add net taxes on product, the same thing. Then it becomes GDP. That is the income method to reach GDP, same GDP. Right. Then this net other taxes on production and net taxes on products are known as government income. So government income. So how do you reach GDP from income method? This is the income method. Very simple. Employment income, property income, and government income. Right? That is how we reach GDP from income method. Then this GDP, gross domestic product, this is the output, comes to the goods and service market. This product comes to the goods and service market. Right? Then these goods and services are purchased by households. Households are the major agents which purchase these goods and services. We call it C, private consumption. The letter C here represents private consumption or household consumption or personal consumption. Right? The expenses go this way and the goods and service move this way, from goods and service market to households. Then the government also purchases goods and services. Goods and services are purchased by government and the payment is known as G, government purchases or public consumption, government consumption, which is represented by the letter G. Then firms also purchase goods and services. They are the capital goods. The goods and services purchased by firms are called capital goods. Capital goods. And the name for the purchase of capital goods is investment. So what do you mean by investment? Firms purchase or formation of capital goods. So these are the three domestic agents purchasing these goods and services. Right? So private consumption, government consumption, and investment. This forms gross domestic expenditure. Right? These three types of expenses generate gross domestic expenditure. Domestic. These are the domestic agents. So this is the gross domestic expenditure. C plus G plus I. But this is not yet the gross domestic product. Why? Because within this bulk expenditure, within this gross domestic expenditure, the goods and services purchased from foreign sector. Right? For example, this smart board, this is not domestically produced. This is imported. So within our consumption, whether it is household consumption or government consumption or investment, goods and services purchased from foreign countries are also there, which is known as investment, which is known as imports. The letter M represents imports. Imports. Right? Then again, part of the domestically produced goods and services. Part of the domestically produced goods and services also is purchased by foreign sector. Goods and services move from our market to the foreign sector. For example, most of our tea is exported, purchased by foreign countries. So goods and services move from our market to the foreign sector and the money comes in. That is called exports. Right? So how do you convert this gross domestic expenditure into gross domestic product? How do you convert? You know this consists of imported goods and services. Gross domestic expenditure consists of imported goods and services. So that should be deducted. Imports should be deducted. And part of the domestically produced goods is purchased by the foreign sector. We call it external demand. So they are domestically produced goods, but it is not included in GDE. So exports should be added. So how do you convert gross domestic expenditure into GDP? Add exports and deduct imports, X minus M. We call it net exports. Net exports, exports minus imports, X minus M. Then you reach gross domestic product, or you call it aggregate demand. Total demand for all these domestically produced goods and services. So what are the components in aggregate demand? Private consumption, public consumption, investment, export minus imports. You have to remove imports from this domestic demand or gross domestic expenditure. Right. Now we have discussed all the three methods of calculating the same GDP. So we can identify with the practical example. Right. So in the output method. So what do you see in the output method? In output method, you first reach gross value added from three activities: agriculture, industry and service. Value added. I will explain how to calculate value added later with my next video. Right? Value added. Value added by agri, value added by industry, value added by service. Then you reach gross value added. To that you add is net taxes on products. Product means goods and service. Then it becomes GDP. Very simple. It's not a big deal when you understand the circular flow. Right. So output method, then value added by agriculture, then value added by service, industry, value added by service. Right? When you add all these three, you get gross value added. Right? To that, which is 16,000. To that you add taxes minus subsidies on products, or you call it net taxes on products. Right? Net taxes means taxes minus subsidies on products. Product means goods and services. Right? So then you reach gross domestic product, gross domestic product. This is the output method. Then we have to go for the income method. In income method, you observed then income method. In income method, you observe how do you reach GDP from income method? You had employment income, which is the payment for labor, then property income, which is the payment for land, capital and entrepreneurship, and then government also receives income out of this GDP. There are two types of taxes there, net other taxes on production and net taxes on products, which is known as government income. However, this net other taxes are imposed within the production process, within the value addition process. So to calculate gross value added, you have to add that. After that only, you add net taxes on products, goods and services. Then it becomes GDP. So that is the income method. So in income method, employment income plus property income, then other taxes less subsidies, you can call it net other taxes on production, which is the production process, value addition process, right? Then you reach gross value added at basic price, which is 16,000, same as output method. To that we add net taxes on products, that means taxes minus subsidies on products. Then you reach gross domestic product at market price, which is 20,000, which is equal to the output method as well, right? Then we have to go for expenditure method. Yes, then other taxes minus subsidies on products and taxes and subsidies on products are known as government income, government primary income, right? Okay, we will analyze it further later on. This is the basic introduction of these three methods. Then we have to go for expenditure method. In expenditure method, you observed, in expenditure method, what did you see? First you reach the gross domestic expenditure by adding the expenses of the domestic agents, households, government and firms, C plus G plus I. From this you deduct imports, because imports are not domestically produced goods, and part of domestically produced goods are exported, which is not included in GDE. So exports are added, imports are deducted. That's how you reach GDP calculate. Yeah, that is the expenditure method to calculate GDP. Okay. So what is the way? First you get private consumption, which is Z, and then public consumption or government consumption or government purchases. The letter G represents that. Then investment, that's the firm's purchase or formation of capital goods, investment. Then you reach gross domestic expenditure. This is the expenses made by the domestic agents on both domestically produced goods and imported goods. This consists of imported goods as well. So to calculate the GDP, you have to remove imports and add exports. Then you reach gross domestic product from expenditure method. So you can see in all three methods we reach the same figure, gross domestic product. So this is the basic understanding of national accounts. This is very, very important. This is the hardest area. So I think I explained it very nicely with the circular flow of national income. So what do you mean by the circular flow of national income? It shows how firms generate output and how that output is distributed as primary income, and how that income is spent again on the output. Circular flow of national income. So there are three methods of calculating the same GDP. Right. Thank you very much for listening to my video. Keep in touch. Right. Please subscribe my channel and click the bell icon. Then you will get the notification when I upload the videos. Right. Because I am going to explain the hardest areas. Only the hardest areas. There are some other areas where you can revise later on, right, with past paper questions. Right, this is the most important but the basic understanding. Thank you very much.